When I think about economic impact, I think about businesses that persist and build social capital over a very long period of time.
You're listening to the Real Returns podcast, where we learn how real investments can make a real impact. Join your hosts, Andrew and Dan, as they share stories and interview business leaders on how real estate and other forms of investment can create meaningful change for individuals and communities around the world.
Hello, and welcome back to another episode of the Real Returns podcast. I am your host, Andrew Riker. I'm joined with my co-host, Dan Croce. Dan, how are we doing today?
I'm doing really well, Andrew. We're coming on the holidays. I'm starting to get excited. Lots of good food. It made me think of something, though. I had a question. What's something that's often served but rarely eaten?
My mother-in-law's like green beans or something.
I'm gonna tell you that. The correct answer is a volleyball.
Hey!
Rarely eaten, right?
Yep.
No, so I'm excited. So the Pitt women's volleyball team is ranked #1 in the country.
They've been kicking.
And I'm going to the game tonight. So
Are you really?
I'm really excited. Yeah.
I've been dying to go out and get to see them. They're crushing it.
And we have, 7 daughters between the two of us. I was thinking, what do you call a girl who's in the middle of the volleyball court?
A Croce?
A net.
A net. A net.
I got some good ones today.
That's pretty good. Yeah, they're good or something. So, all right. Well, let's get on with some real content. Poor Kirk is already crawling, wishing he didn't sign up for this. But we're here recording live from our studio in Pittsburgh, Pennsylvania today. And that's because we actually have a local guest. Kirk Botula is here from InnovationWorks. He is the Chief Strategy Operations Officer. Been there. We were just talking for about a year and a half. And he has already been implementing some amazing change there and creating impact all around the region here in Pittsburgh. So really excited to have him on the show. Thanks so much for being here, Kirk.
Thanks for having me. Kurt, would you mind, just to kick things off, to give our guests a sense, or our audience a sense for your background, your career, just give us a sense for, what the narrative of your career has been, what are some of the things you've done, and then today, what are you working on in IWN in general sense?
Sure. So my career has been focused on commercialization of technology and driving early stage companies to successful growth and exit. I grew up in Pittsburgh. I was at Carnegie Mellon as a young guy. One summer, I had a job going door to door for a nonprofit or like a clean water action type of thing. Was knocking on doors to raise money for this organization. And this was back before the Rust Belt. It was when industry had all disappeared from the region and the company towns up and down the river valleys were just filled with unemployed skilled laborers. And I was spending my summer knocking on doors, asking these people for money. And as I began to talk to them and talk about the situation that they were in, it had a huge impact on me. And I began to just focus on the question of, where did these jobs go? And eventually started wondering, where do jobs come from? And when I went back to school, I began focusing on those questions. I eventually became convinced that the commercialization of technology is a principal driver of employment and decided, okay, well, that's what I want to do. And so I finished my undergrad, went and got my business degree, focused on entrepreneurship and technology commercialization. I did a stint in high-tech manufacturing and printed circuit world, developed a go-to-market plan for a new telecommunications technology that is a company that still exists today. Went to Mellon, did new product line development for a software company they had acquired in the financial technology space. Joined some friends who had spun out of Mellon, had a software startup that was doing a contract programming for large banks. And we transitioned it from a service company into a product company, grew that in the asset management space about to a 70% market share in the US, 20% in Europe, into a global platform. Left there and we exited that to private equity, then went to Carnegie Mellon, where the provost at the time was starting a venture studio and helped stand that up. We spun out about half a dozen companies. I took one of those companies from a defense research program into a commercial company. We exited that to a strategic. And then I went to a company outside New York where the founder wanted to retire and he wanted to exit the company. So he brought me in as the CEO to manage the transition and exit the company to private equity. And that was in the fintech financial services space. And it was after that I got a call from InnovationWorks, and a friend of mine who was there said, basically, hey, Kirk, you care about the region. You're passionate about startups. You're interested in coming in, helping out here. And that's my project. So that's how I jumped at the opportunity.
Yeah. Wow, that's amazing. That was about a year and a half ago.
Yeah.
Great.
And tell us so that the theme of our podcast is impact investing. And for us, typically that plays out in conversations about the real estate space. So the physical built world and how we interact with it and how we can utilize capital and resources to make it more flourishing for everyone. We don't often get to think about that in the tech space or the startup space, but I think that's a very natural arena to think about how to contribute to flourishing in the world. So tell us just kind of the most basic level, how do you approach thinking about entrepreneurship and maybe specifically tech startups, high growth entrepreneurship, and the way that it impacts the world around us? It's a super 10,000 foot question.
Sure. So, and I'd say in the context of impact investing, and I have a love-hate relationship with the concept of impact investing. And here's why. So I have to begin way back. Let's begin with the concept of work. What is work for? So work is a good thing, and it is how we are useful to one another. It's how we provide for our families. It's how we, grow, leverage our gifts and talents to the benefit of the community, right? We know, work is awesome. And we know that it's broken, like projects are late, things cost too much, there's defects and things like that, right? And so it is central to, work itself is central to human flourishing and caring for others, and there's stuff that needs to be fixed. Now, what are businesses for, right? So businesses are the context in which we collaborate with other people to take work to a larger scale, right? And my point of view, and I shared this with Dan before, is that, business is to life on earth what the sun is. Like, I should say, like, business is to our communities what the sun is to life on earth. And it makes everything possible, because any gap between revenue and expenses in a profitable business somewhere is the source of all the capacity for human flourishing.
Yes.
That's why I'd say, like, every kid that has a full belly, every family that has time to care for one another, every workplace, every nonprofit, every government, every theater, every university, every library, there's nothing in human culture that is not fueled by the gap between revenue and expenses of some profitable business someplace. So because of that view, the idea of impact investing to me is kind of like, what are you talking about? Like business is, it's like the campfire around which the whole community is able to feed itself, right? Now that said, so business is for human flourishing, right? And its fullest sense. Now, one of the problems we have is investing. And one of the problems is the commodification of business. And it's the idea of, hey, we can take this thing, assign value to it, and then we can liquidate the business and create liquidity and separate the value from the business, right? And then you get into the idea, well, that creates value and we can maximize that by doing things that aren't good for the business. And so you get into the idea of maximizing shareholder value. So you get shareholders, which create a problem. They also create value also by providing liquidity. And you have this behavior of maximizing profit, which can create pressures on businesses that can erode the value to other stakeholders, to multiple stakeholders. And it's why, like, when you think about in the real estate space, when you talk about like building communities or buildings that support human flourishing, well, why wouldn't they always do that, right? Well, it's pressure for profit maximization, right? It's about like cutting corners, being more efficient, compromising And I would say there's nothing wrong with efficiency. Efficiency can be good stewardship, but it's when you start maximizing for one dimension at the expense of another, you create these trade-offs and you sub-optimize, right? So you're not optimizing for flourishing, you're optimizing for returns. And like, it's possible to thread the needle and have excellent returns and excellent outcomes, social outcomes for the business. And I'd say most people, that's not the project of most that have institutional backing, right? Because they have fiduciary responsibility to sub-optimize. Does that make sense at all?
Yeah, it does make sense. I love the philosophy there. I think it's refreshing. It's something you don't hear folks talking about a lot. So I'd love to hear, how do you see that playing itself out in the work that you do at InnovationWorks?
Yeah, well, so InnovationWorks is super fun. And I would say, like, you can understand from my background, like my personal dream is like everyone has a business. All right, everybody, start a business. Like now, like go. And that's what we get to support innovators and entrepreneurs and surround them with the resources and the people and the training to increase the likelihood of their success. And we're usually the first institutional investor in, and we help make it safe for other people to come around and support the company. And we're one of the most active seed investors in the country. We're the most active in Pennsylvania. We've invested in over 700 companies over time, deploy, I think, over $300 million, catalyzed over $3 billion in follow-on investment, created thousands of jobs. And the state wins because every dollar that they give us to deploy, they get $4 back in tax revenue. So it's kind of a virtuous circle where the state is driving and catalyzing innovation and economic growth. It's just a valuable work. Yeah. So it's super cool.
So is the state your primary funding source?
Yeah. Yeah. We have funding from the state, we have funding from foundations, and we have some federal funding as well.
What's an average check size that you guys are rating for?
That's a great question. So on average, it depends on our accelerators. If you get into the accelerator, we do a $50,000 convertible note. If you exit the accelerator successfully, you get a $50,000 convertible note. Our seed fund, the average check size is around 150,000. And, over the life of a company, we can do multiple investments. So, that can accumulate significantly above that. But in general, it tends to be lots of, compared to venture funds. Venture funds might be doing, half a dozen deals a year, writing large checks.
Yeah.
We do a ton of deals, writing small checks.
I've heard you talk about a little bit of a philosophy of very long-term time horizons when thinking about investing. And as a real estate person, that concept really appeals to me. And as fund managers, we often have the tension of, all right, well, we've got a fund with a fine rate of life. And so you're kind of playing a bit of a game where you're optimizing for value on a certain date whenever you're going to exit. And sometimes you have to make decisions around that, that timeline that you might otherwise make a different decision if you weren't sort of forced into a certain timeline. So at times we had a vehicle that we hoped would be an evergreen fund, and it's tough to make that work in the marketplace where investors want liquidity at the end of the day, which makes perfect sense. But talk to us a little bit about, your perspective on investing for impact or flourishing over the very long term and how that might look.
Yeah. So this is just a personal point of view. And when I think about economic impact, I think about businesses that persist and build social capital over a very long period of time. And I did research on this. We were talking about it. I started wondering, what were the companies, in what industries and what companies have lasted the longest? And I learned that the longest running company in history was a company called Kongo Gumi, which was a construction company in Japan in, I think it was 578. The Emperor of Japan brought a Korean family to Japan to build and maintain Buddhist temples. And they were in the construction business until they were acquired in the 80s. So they ran for 1,400, 1,500 years And was joking with Dan, like, I wouldn't hate to be the son that after, 1,000 years, like, sold, like, I'm cashing out, man. The timing's right. So, you look at this, and I have a friend that lives in Porto in Portugal, and visited him, and his girlfriend was a tutor at at a winemaking family at their vineyard, and they have been there for 500 years. And we go and visit, and, they're in this vineyard. They have a little chapel attached to the house. The workers all come together. They meet there in the morning. They go out and work during the day. They have a shared meal together. They've been doing this for 500 years. Right? And I think that sort of permanent economic impact and the development of social capital, those like thick relationships, are critical and valuable. In fact, the Mars company, which is one of the largest privately held companies, they had a think tank they developed to look at what they called the economics of mutuality. And during that process, one of the initiatives they were looking at was cocoa farmers in North Africa were leaving the cocoa fields, and Mars didn't want to buy the cocoa farms. They wanted there to be a vibrant community of folks farming cocoa there. And there would be, because they're private, the chairman said, if we're not investing for the next quarter, we're investing for our great-grandchildren. And so they've invested in trying to understand what's going wrong here. Why are some communities flourishing and some collapsing? And they came back and they said, it's an issue of social capital. And so social capital is critical for economic development and economic well-being. It can't just be transactional economic activity. Right? So I'm personally really interested in this question of how do we make business persist? And I'd say structurally, one of the challenges is, as you know, the minute you have investors involved, you've made a promise to create liquidity event, right? So then the question is, all right, can you develop structures? I mean, people talk about patient capital and that sort of thing, but can you either design a business model that can throw off enough cash that it provides competitive or acceptable returns to investors while not compromising the well-being of the business? Or can you come up with some sort of a structure where the investor can achieve a return, think of it more like a bond rather than like a growth stock, right? And I don't know the answer to that, but I do think that there's a fundamental tension there. And I would also say that the tech ecosystem, principally, I'd say it creates economic churn, right? Like it's like a bunch of little fruit flies and, kind of starting up and then getting acquired. And it's very, very rare, especially in the tech sector. It's very rare to see long, like mid to large organizations stay and persist, right? And stick. Right? Yeah. So I don't know. Those are I think interesting structural problems are something I think a lot about. And, I think about like, how can we innovate in how we either like build funds or look at business models that will, in a way that will lead to companies that stick around for 500 years.
Yeah. Does that evaluation make its way into how you think of investing at InnovationWorks? Like,
yeah, well, so
perspective.
I would say yes in this way, because we invest for economic impact, and the simplest measure of economic impact for us is jobs, right? And so we're not investing just like a venture fund, just looking to maximize return. And this is just how I think about it. But if you think about kind of a 2x2 grid with one axis being job creation and the other axis being returns, sort of the sweet spot would be in the upper right-hand corner.
Returns.
Yeah. And the other two, like high jobs, acceptable return would be good as well. High return, no jobs. Okay. Right.
Just avoid
no jobs. Yeah. But you just want to stay out of the lower left corner, right? Where it's like you have a job, no return.
Right. So that was going to be one of my questions, is just how do you measure impact for InnovationWorks? So you've got jobs, job creation. I heard you talk a little bit about kind of your philosophy on the founders and, how else are you thinking about impact? Are you thinking about regionally?
Yeah. So other things that we think about impact, we think about providing access to capital and mentors to traditionally marginalized groups of people. So we think about access as another dimension of social impact. We think of geography in terms of social impact. So people tend to think of InnovationWorks as being dealing with Pittsburgh's tech startups, and we support the counties surrounding Allegheny County. We support Southwestern Pennsylvania. So we support manufacturers. We have a large manufacturing network in Southwestern Pennsylvania where we will provide grants for startups to work with local manufacturers so that they don't have to, go offshore to build their products. So I'd say we think holistically in terms of the ecosystem in that tech area.
Great. Yeah, that's helpful.
In your role, one of the things that I'm maybe a little bit jealous of about your role today is you get to interact face to face and kind of lock arms with so many founders. What are some of the most basic pieces of it? If you're sitting down with a founder, they're already they're in the IWE portfolio, and you're going to talk to them about how to navigate these next couple of years of high growth efforts in their business. What are some of the basics that you try to impart to these founders?
Yeah, so for me, there's sort of two buckets. One is focused on, I try to shake a founder down in terms of what is success, because you would be surprised at how many founders haven't really thought through that. They just have visions of sugar plums, or they have a passion about a technology, right? It's like an idea they love, or they haven't really thought about, where's this take me? And what are the likely outcomes? And am I comfortable with that? And just we were talking about investors earlier, here's a simple concept. Talk to a founder, say 20 years from now, what do you imagine yourself doing? If their story is, well, I see myself, like someone has taken over the business and I kind of come around now and then, and it's old man Jones walking down, encouraging the young engineers. And I say, well, if that's your dream, that isn't the dream of early stage investors, just so you understand. And so if you're going to take investment from institutional investors, their dream is you'll probably go from, 1 to 10 million, and then they're going to need someone else to take the company from 10 million to 50 million, and then someone else to take it from 50 to 100, just probably.
Yeah.
And so if you take investment, your investment is really predicated on your ability to predict your future cash flow. I'll say, how good are you at predicting future cash flow? And I'll say, what do you mean? I say, well, when you're taking institutional money, you're making assumptions around your ability to hit certain milestones, accomplish certain things with that funding. And if you fall short of that, you're going to wind up shifting the ownership structure of your company, right? So whether you're participating in the company or not, over time, at its simplest level, is really just the result of your accumulated decisions around predicting your cash flow. That's it. Everything else, that's all it is. Yeah. And so let's talk about that. What's success? What do you think of, are you tall enough to get on this ride? Is this really, is this the path you want to pursue? And I'll talk to them about, what happens, what are conventional rounds look like? What happens if you get down rounded? What are these different outcomes? When does the investor win, but you lose? When do you win together?
Yeah.
When does everyone lose? What's that all look like? And because I find no one talks to founders about the end of the journey with good outcomes and bad outcomes, yes. Right? And so there's information asymmetry in the ecosystem where you have very sophisticated investors dealing with people who are going through this for the first time. And I hope to serve as a Sherpa kind of thing, okay, all right, you want to get this, well, let's talk about how much oxygen you need. Yeah. Are you willing to spend 2 months at the base camp? This is what this looks like, right? Yeah. And I think it's critical to have a guy I work with named Justin Wilcox, who's a terrific innovator, who introduced me to the idea of a definition of victory. And he said the first thing he does with a founder is define victory, and define how, if the company doesn't work out, now define victory for me, right? So separate your definition of success from the success of the company. And if you have a founding partner, do this together, because everyone talks about how partnerships split up. The reason partnerships split up is because there was never any discussion. It's kind of when you're getting married to someone, you should have the conversation about whether you want to have kids or not before you get married, right? It's like you have to have a vision of the future. And yeah, so I would say I have observed that a lot of people talk about what's next for the entrepreneur, but they don't talk to them about where they're headed.
Yeah.
Does that make sense?
Yeah.
And then, yeah, so that's that category. That's more like the personal goals and stuff. The other side is just basic, speed to market leadership, and like, what's the block and tackle? Like, given what you're trying to do, how do you win? And how do you win as fast as possible? How do you learn as fast as possible? Because to me, that's like, he who learns fastest wins.
Yeah.
And there's a fundamental difference between participating in the market and playing to win. And to my mind, a lot of companies wind up with insufficiently differentiated solutions where they're kind of dog paddling with a nice to have solution. They can't understand why they just keep dog paddling in circles. And so, the thing is to prevent them from doing that. So I'd also say, to me, it's a win if you can stop someone. Like, if you're going to fail fast. Like, let's figure out as fast as, if this isn't going to work, let's figure it out as fast as possible. And I think that sometimes people's behaviors, they avoid coming to that conclusion. So they, especially with technical founders, they will work on technology instead of talking to customers, right? And it's just putting off the inevitable discovery that your customer doesn't care about your
Which is usually the case, right?
Yeah. Does that make sense?
Yeah, for sure. I'm curious, just before we jump into the lightning round, you mentioned underrepresented would-be founders. You painted a bit of a picture of how the industry is today and how they sort of have to maybe fit that box a little bit, not to put words in your mouth, but they have to, in some way, fit the mold to be able to accept institutional investment and understand that world. Is there an aspect where there are opportunities for particularly underrepresented folks to, found companies that, and maybe this is outside of the realm of InnovationWorks, but I'm connecting it to this, like the business that lasts forever, like this construction business. It's not like the sexiest business, but it's a Main Street business that, and oftentimes maybe underrepresented folks might be interested in that kind of thing. I don't know. I think about impact in that world as well. What's your perspective?
Yeah. So I am personally super passionate about Main Street businesses because, as I said, I think everyone should have a business.
Right. And not every business is going to be this booming tech company that fits the mold of what you're doing.
Yeah. And those businesses are actually more likely to persist, right? And especially service businesses, but they less likely to be disrupted by technology and that sort of thing. And those are outside the scope of InnovationWorks. So that's so what I do is I work to help the tech founders. And I also think, there's a funny thing because in the tech ecosystem, the idea of a lifestyle business is a pejorative. Like, you'll hear people kind of insult it. It's like, yeah, it's a lifestyle business.
Good for you and your yacht.
Exactly. It's like, he doesn't have any investors he has to respond to. And he's, taking 7 figures out a year, and his staff are all overpaid. Stupid lifestyle business. And I think that's, investors are money salespeople, right? And I think that's a little bit of, there's a phenomenon in the tech ecosystem where people think fundraising is victory. Like, you see celebration. Oh, look, a couple of professors were given $300 million. Woo! Right. And like, that's a success. You never hear anyone say, this company just became profitable, right? Like, which is actually what success is, right? So we completely, pivoted what success is to needing capital. Which is like, these people need other people's money because they can't produce enough on their own. Right. And it's like, wow, then you're writing this up. It's a puzzle. And then we have this pejorative view of lifestyle businesses. And what I think is funny, when I first saw I saw some, statistics about how women founders raise significantly less capital than male founders. And my first thought was just like, wow, that's really smart.
Yeah, get out.
They get it. They get it. Yeah, they're just not telling the secret, And I don't really know what the driver is, but whether it's just that they're smarter than everyone else. But at any rate, that's
Very hopeful. Yeah. So that's something I'm passionate about. I'm a girl dad. So you're, this
I
recent
have 3 girls
anecdote.
myself.
Yeah, 3 girls over here too. So we have a lot of girls between the 3 of us. Wow. All right. We're just going to have some fun here. So we call this the lightning round. We got to know you professionally. We want to get to know you personally. So first question for you is, what would you say is your biggest win?
Oh boy. So for me, like I said, I was always driven by creating jobs. And I would say any organization where I've worked in that has driven growth or enabled people, made it easier for them to be awesome, is a win. So I love the grind. I love the grind, and I love driving an organization towards excellence, towards establishing an organization that persists and helping people achieve their potential. That's the stuff that drives me.
Oh, I love it. It's beautiful. What would you say is your favorite movie?
My favorite movie is Babette's Feast.
Oh,
Did you ever see that?
I don't think so.
You gotta see it.
Apparently.
All right.
Yeah.
Add it to my list.
Yeah, it's based on a short story. You'll need like a glass of wine because there are subtitles, but it's worth it. It is.
I go Babette's Feast. It's on my list. How about a favorite food?
My favorite food is probably the salmon dinner at the Rochester Inn. I don't know if you ever been there.
No.
They have this, it's this little local bar where they've got up in the North Hills, and they have a wood-fired grill, and, it's a shot in a beer place, but they grill salmon and in just a simple, beautiful, perfectly executed way.
Love it. I love a good grilled salmon. What would you say is a current growth edge, a way that you're looking to grow personally or professionally?
Oh, that's a great question. So right now, I am personally focused on kind of how do I bring my experience working as an operator in growth companies to support the context I'm working in, like to support W institutionally and support the founders. And it's a different modality, right? So, there's a lot to learn, and that's fun. That's, whatever stuff is new, it makes it interesting, right?
That ties closely to the point you made earlier about learning as quickly as possible. That really connects to some of your DNA there. What's some really good content you're taking in these days? A+ content, podcasts, books, whatever.
Yeah, so probably the same as everybody else. So I listen to Peter Attia a lot. I think, and if you don't listen to Peter Attia, you should listen to Peter Attia.
Outlive is my favorite.
I'm like in the tank on Outlive. Yeah. So I love that stuff. I went through this summer, I started reading, I just needed a mental break from business stuff and health stuff. And I started reading like old adventure stories. Like I read Tarzan of the Apes, like ripping yarns from like Rudyard Kipling, these sorts of things. I've been reading like pulp fiction, classic pulp fiction, is what I've been reading lately, which is just read the Horatio Hornblower books, which I recommend. They're like great studies in leadership. Super fun. It's kind of like the book version of binging Netflix. Kind of just
That's awesome. All right. Well, if folks want to get in contact with you, what's the best way to connect with you or InnovationWorks?
Yeah. So at InnovationWorks, my email is first initial, last name. So it's Botula, Botula at innovationworks.org. And can always find me there. I'm on the website. Always happy to help entrepreneurs and help you engage in the ecosystem.
Yeah, great. Well, this has been really helpful. Thanks so much for being on the show. I know I learned a ton about the impact and the work that you are doing and that InnovationWorks is doing in the region. And I'm really grateful for that. So thanks for being on the show. And we'll look forward to catching you all next time.
Yeah, thanks for having me, guys.
Yeah, been great. Thanks, everyone.
Thank you for joining us for this episode of the Real Returns Podcast. We hope that you learned something new about how you can invest to make a lasting impact on those around you. Please be sure to subscribe to our show wherever you listen to your podcasts, leave us a review, and share about us on social media. We hope you will join us for our next episode, where we will be continuing the conversation around impactful real estate investing.